Like we promised, we do have the management of Jai Balaji, Aditya Jajodia, Chairman at Jai Balaji Group, joining in with us. And this is to talk about their Q3 numbers. Overall, when you're looking at it, revenue was almost flattish on a year-on-year basis, but operationally seems like a strong performance that has come in on that front. EBITDA has seen a very good improvement. Profits of the company also have seen an improvement coming in this time as well. Margins at around 16%, highest ever quarterly EBITDA is what the company has reported as well. Now, to talk more about the numbers, what should we be expecting from the company going forward, we do have Mr. Aditya joining in with us. Thank you so much, sir, for joining in with us this afternoon on ET Now. And, I want to just start by talking about the growth that you've already seen in terms of the revenues of the company over the last 2-3 years. This time, obviously, on a year-on-year basis, when we're comparing, it's a flattish revenue growth. But overall, how are you seeing your growth strategy for the company in terms of revenue for the outlook for the next quarter also? What is it looking like from the company's point of view and in terms of trends from demand as well?
Yeah, I'll just answer all your questions. See, to the first part of your question in terms of revenue growth, actually in the third quarter, we were under the maintenance for one of our major blast furnaces, which is going a very massive modernization cum expansion program, which will be restarted this particular month only itself. So in case you have to compare the revenue from the last quarter, the revenue growth was flat. But as you must have noticed that the margins have improved hugely. The margin improvement has happened basically because of more focus on the value addition products, which we have taken over the last 2-3 years, the results of which are now showing. So as you might have noticed that the margins in the last quarter of the last year, it was around 8%, which was around 16% for this particular year. And as far as the projections for the revenue is concerned, the company is already in the middle of a capex program of 1,000 crores, out of which 350 to 400 crores have already been spent entirely out of internal accruals without taking any further debt. And as this capex will get completed, the revenue will keep on growing. Actually, as I just mentioned a couple of days ago also to somebody, that the company will be more focused on the bottom line than on the top line. The top line will automatically grow.
Sure, point taken that the top line will automatically grow. Just hold that thought, Mr. Jajodia. I would want to bring in the intraday chart of Federal Bank on the screen, because the bank has just reported its numbers and it looks like it is a beat versus expectation. The net profit for the bank has actually come in at 1,006 crores as far as the standalone number is concerned, and that compares with the expectation of 900 crore thereabouts that we had seen. Even if you look at the NPA ratios, the gross NPA has come in at 2.29%. That compares with the sequential performance of 2.26% last quarter, and the percentage of net NPAs have been kept steady at 0.64%. So overall, it's looking like it's a good set of numbers, at least on the bottom line. We'll wait by and see how the net interest margin performance shapes up for the bank. But for now, looking steady as far as Federal Bank is concerned. There you have it on the screen, the overall NIIs as well as the profit figure. But coming back to our conversation, Mr. Jajodia, Jai Balaji has been one of those turnaround stories. Back in 2016, it was logged in as a NPA. We had seen huge debt pile up on the counter, but from there, the operational performance has improved quite steadily. If I had to ask you, what's your vision for the company for the next 2 to 3 years in terms of overall debt, in terms of the overall strategy with your product expansion and capacity expansion? How would the company's profile look 3 years from here on?
Madam, over the next 3 years, we will be basing our growth profile on 4 pillars. The first pillar would be obviously margin expansion. And for margin expansion, we are already in the middle of a capex program, as I just mentioned. The entire capex will be entirely from the internal accruals. So this is going to be the first program where we need to complete the capex. By doing this capex, we will come to the second pillar, which will lead us to margin expansion, as we will be adding more value-added products to our portfolio. Currently, approximately around 50 to 55% of our sales in value-added products, it is around 50 to 55%. 2 years ago, it was around 30% only. In the next 18 months, it will be around 80 to 85%. So the focus will be on margin expansion. The third pillar is that we will be focusing to be a net debt-free company over the next 18 months. Our debt currently it is around 560 crores only, and with EBITDAs of around 250 crores, I think in every quarter. So we are very confident that we'll be able to be net debt free over the next 18 months in spite of the capex program being completed. And the fourth focus will be to enter into further niche products where we can capture the market share and where we can expand our businesses. But I can assure you one thing is that over the next 2 to 3 years, the company has no plans to raise any further debt. is the company's focus will be to add value, and the company's only focus will be to focus on the products which will give us more margins.
On products which will give you all more margins. Obviously, so you've spoken about that capex also, that 1,000 crores capex as well, capacity expansion which you all are focusing on. In terms of the product which I'll be focusing on, that's going to be which ones? Ductile iron pipes then?
Yeah, ma'am. It is going to be ductile iron pipes, where our capacity currently it is around 2,40,000 tons. We will be expanding it to 6,60,000 tons. In addition to that, we are also adding specialized ferroalloys to our portfolio, which is already there. So there the capacities will be expanded. And also we are adding capacities in hot metal, where our capacity currently it is around 0.5 million tons. It is going to increase to 0.75 million tons. All this will be aided by backward integration, like sinter plants, like addition of more boilers for greener energy, cleaner energy, and for cheaper energy also. So many initiatives have been taken. But the biggest, ultimately the basic focus will be on the value-added products.
Added products is where the interest lies. On that note, Mr. Jajodia, we let you go.